Okay, this video is going to show you how to start the tax return, and we might complete it. We'll just see how long it gets. This is signed for week 5. You've got a couple weeks to do it. It's not due right away, but you might as well get it done. We're doing the tax return that's in chapter 3. I did post it up in there. I just took a picture of the pages, so it's not very good, but it is posted there if you need it. But it's also in your book. So it's chapter 3, starts on page, actually, it starts on page 3052. It's the Kingfisher Corporation. All right, so I'm going to make this half, and wait, I don't know what's happening there. All right, see, it's not a very good copy, so you might want to actually use your book, but anyway. All right, so we're going to start a tax return. It's the Kingfisher Corporation, and they're selling fishing tackle. Pertinent information regarding Kingfisher is summarized as follows. Here, let me just go look at this first. Why does my screen keep doing that? All right, so we have their EIN number, the principal business code. Nancy owns half the stock and is the president. Dolores, Nancy Trout and Dolores Lake, isn't that cute? Owns the other 50% and the vice president. They're full-time employees. They have their socials. They use the accrual method, calendar year taxpayer. Inventories are determined using FIFO and lower of cost or market method. Straight line depreciation for book purposes, accelerated depreciation for MACRS purposes. Corporation distributed cash dividends of $80,000 during the year. And then we have the income statement. All right, and you might note that depreciation is based as book depreciation. And probably down here, well, it just says to enter that same number for depreciation. So anyway, all right, and then on the next page, they have the balance sheet. That's a little better picture. Maybe tomorrow when I'm at my desk, I'll try putting in a better picture. And then we're to do the tax return. All right, I want you to use ProConnect. So you need to log into the ProConnect that I sent you an email link to be staff. All right, and let me go ahead and make this big again. And when you log in, it's going to look something like this. Okay, we already have a couple of clients. All right, I did a Pet Kingdom. I don't know where it went, but anyway, I did the Pet Kingdom, and then I had another student sign on because once a client's in there, it's in there. So you're going to have to create a client. All right, actually, we're going to do create a tax return, and we're going to add a new client. All right, so when you do your client, you're going to do the Kingfisher. Oh, well, it's a business, sorry. When you do a business, and it's Kingfisher Corporation, and then put your first initial and your last name. All right, so that we all have our own client. Otherwise, we'll just all be working on the same tax return. So make your own client. It's a business. Add your name to the end. We're all going to use the same information. Just have a different name in here. All right, the EIN, they gave it to you. It's really just all ones. All right, you can make up a number. It doesn't really matter. I don't think we need an email. We're not going to, oh, they actually have an email. Kingfisher@kf.com. Address 1717 Main Street. Somebody already created one because I do not think I created that Kingfisher one that's already there. You need to create a new one though. What am I trying to do? Eli. 55731. Okay, so see, this is what we're worried about. So since somebody already put in Kingfisher once, you need to just put any number here that you want. It doesn't matter. Just make up a number. All right, we're going to be doing a corporate return, so Form 1120, and we're actually doing it for 2019. And then save is down here in the bottom. All right. We don't need to verify anything, so we're all right. All right, so now what we want to do is input the return. All right, client information, it's already in there. We're good with that. So we can go on to officer information, and you need to put in the info for Nancy and Dolores. You can see Trout. I don't have addresses for them. I'm not going to worry about it. You can use the same one if you want to. For social, 1, 2, 3, 4, 5, 6, 7, 8, 8. 1, 2, 3, 4, 5, 6, 7, 8, 8. She's a U.S. citizen. Did I pass this? Oh, if not U.S. Hello, I'm crazy. She is the president. She works full time. So I'm going to say 100%. She owns 50% of the stock. And that's it for her. So now we need to add Dolores. So you click the plus, add another tab. And then you need to do the same thing for Dolores Lake. And walk through all that stuff. I don't know if it'll let me. $100. Oh. 50%. What's invalid? 1, 2, 3, 4, 5. Why is that invalid? So some of these numbers just make up. All right. So I think that's enough on that one. So then income. We come over to income. And it will change over here. So they give you all the info. Gross sales, 2,408,000. Sales returns and allowances are 80,000. All right, so 2,408,000. Returns and allowances are 80. Oops, you can also type stuff out here. It'll give you a little, like if you have more than one. I didn't even know I clicked on interest. Do they have any interest income? They do. All right, so interest. Tax exempt interest in state bonds. Let's see what we have here. Interest wise, state bonds and certificates of deposit. So state bonds are 14. Bonds 10,000. Okay. Regular interest is CDs. That was 10. So that takes care of my income. I do. All right, cost of goods sold. Here's how I do cost of goods sold. We do have beginning and ending inventories. But they actually tell us cost of goods sold. But it wants us to actually figure, like, it wants to put the calculations in. So our beginning inventory was 900. Where's my ending inventory? Purchases, I don't know. Okay, so I came over here and I calculated what purchases must have been so we can do it. And I just used that little formula that hopefully y'all all know. But cost of goods sold is calculated as beginning inventory plus purchases minus ending inventory equals cost of goods sold. And I had beginning, ending inventories, and cost of goods sold, so I just solved for purchases, which was this 1,032,000. So 1,032,000. But somewhere I feel like it needs my ending inventory. Here it is down here. So scroll down to ending inventory. 101, 1012. All right, so that was cost of goods sold. All right, dividends. Oh, they got some dividends. Investment in less than 20% owned U.S. corporations. Okay, so back up to income. Interest income. Here's our dividend income. Right there, 12,000. Okay. All right, what else do we have? Dividends, interest, we already did. And that was our total income, right? All right, now we got to do the expenses. So when you go to deductions, we also need to put the officer stuff in. I don't know if that's on here or not. Let's see. Didn't I already put their stuff in? Thought I did. Am I that crazy? Okay, well, I didn't do that, but I swore I put their stuff in. Nancy Trout. 2, 3. 5, 6, 7, 8, 8. Shows 50%. And then you gotta put Dolores back in. Individual, Dolores Lake. 2, 3, 4, 5, 6, 7, 8, 9. Okay. Deductions. All right, here's what I was looking for. Officer compensation. And sometimes you just have to kind of keep clicking around to get it. All right, so Nancy made, did Nancy make? They both made 160,000. All right, depreciation, it tells us is 40,000 with the asterisk. And then it says you're not provided enough detailed info to complete a Form 4562, which is for depreciation. If you solve this problem using Intuit Pro Connect, enter the amount of depreciation on line 20, Form 1120. So we're just going to put it on there. Direct input. What's that do? Now we're going to hold off on this one and maybe overwrite it when we get to the form. All right. I clicked on this deductions and it basically pulled up a whole big thing of stuff that you can just start filling in. Look, here's depreciation override right here. 40,000. All right. I'm going to start back at the top now and go down. So I'm starting back up here with salaries clerical, and then I'm going to work my way down this list. It's kind of hard for me to see that, so that's why I keep closing it. All right, so salaries, clerical and sales. Element officers, 290. Taxes. And I am just going to, it literally just says state, local, and payroll. So I'm just going to put it all in payroll because I don't want to worry about it. 85,000. Repairs and maintenance. You might notice on here, they're in alphabetical order up here. 56,000. Interest expense. All right. Interest expense. $12,000. I don't think we put the 8,000 on the loans to purchase state loans. All right, advertising is 6. Y'all need to look that up and see what you do with that 8,000. Rental is 68. Rental is 68. I'm just going to say real property, like a building. Depreciation we already did. Charitable contributions. Just going to do that one. 15,000. Employee benefit programs. $24. Premium on term life insurance policies. Kingfisher is the designated beneficiary. All right, y'all need to check on that. I'm pretty sure the life insurance premiums are not deductible. Um, so make a note of that. Maybe double check it. All right, and I think I'm to the bottom. That's it for that. Okay. All right, then you got to put in the balance sheet. A form 1120 has a balance sheet that you literally have to fill in. All right, beginning and ending. An entry in the ending column overrides the program's automatic calculation. I feel like inventory should already be in there. Oh well. All right, so this was on this second page. Oh, sorry. That was on this second page. It's a little easier to see. There's that one. Uh-oh. Okay, see, I can't make it this small. I'll have to just keep using my book. Did it do that? All right, 380. Okay, so I'm going to enter this stuff in. I'm going to pause this. Y'all can enter it. Okay, so I put in the amounts. And you might notice like here it has two because I've listed the two things here. When you click on the box, it'll pop up where you can put them individually to add them together. All right, the accumulated depreciation at the moment I have going in is a positive number, assuming that it knows to deduct it. Not sure what the little asterisk here means. Because I couldn't find that anywhere. But we'll see if that's correct when it shows us the total balance sheet. And we can go back and make that a negative if we need to. All right, and then I did the same thing for the liabilities and equity. All right, I put the retained earnings and unappropriated, and notice it only lets me do the beginning balance because it's going to automatically calculate the ending balance. Okay. Oh, my Atlanta, excuse me. All right, here are the M1s and N3s. M1 is a book to tax adjustment. So net income per books is the one they gave us, 397,320. All right, the federal income tax was 106,680. All right, income subject to tax, not recorded on books. I don't think we have that. What we have is the income on the books not subject to tax. And then expenses recorded on books not included in this return. We need the loan to purchase state bonds and the premium life insurance. All right, here's the life insurance premium, 16,000. Income recorded on books. Okay, so that's what we need. Tax exempt interest. Do we need to override it? Why is it not popping up? All right, I'm not going to put anything there because I feel like it should pop up automatically. All right, I think that's it. And then the M3. I'm actually not going to do this. Okay. All right, so you should have all your numbers in. And then there's, you're just gonna have to kind of look around and see what you can find. Here's like a preview forms, but I don't think it really shows me. Let it pop up. Oh, it is actually going to show it to me. So here are all the forms that we would see. Here's the actual tax return. All right, we'll see if everything balances out though. There's my tax computation. Oh, they had paid some tax. We need to put that in so it doesn't show they owe a ton of money. You'll need to find that and put that in. They actually paid $27,000 each quarter. So don't forget to put that in. All right, here's what I want to see. I want to know if this... See, it did subtract. It knows to subtract. Make sure my things balance out here. Okay, but look, that doesn't balance out. And I don't know why. Y'all see that? My total assets. Here are my assets and liabilities and equity balance out. But over here, on the end of the year, they do not. 2564 100s. I've got something wrong here. Let's see. 20,000 is my land. 337 300, 480, 280, 1,012, 160. Oh, I don't have my federal income tax refund in there. All right, so I need to fix that. I don't know if that's gonna, will that fix it? Let's see. I need to pause for a sec. Okay, so it's not gonna fix it. I do need to put that in there. But I'm still off by like $88,000. So y'all can look at this and then just kind of see, the main thing I want y'all to see is, how you put it in. Now, of course, this is Pro Connect, so different programs are going to have different ways, but the basics are usually very similar. And then I also want you to see some of the schedules that come in. So, like we started with the 405 320. That was, let's see, something is off here. Is that the net income I said? I'm super confused. Net income per books? I don't think that's what I put there. But anyway. And that should tie, when you put in all this stuff, it should tie to page 1, line 28. So let's see. Here's page 1, line 28, 514. And that does. But I don't know where that number came from. I'm going to have to go look at it. All right. And then retained earnings should match out. So it did, the 12,720, this income or loss per books, which I'm pretty sure I did not put in that number. It's 397, 320. $8,000 difference. Oh, the loans to purchase state bonds. But it should have added that back. It should have done that up in here. That's there. Let's see what statement 4 is. Oh, that's the premiums. Okay, interesting. It added the 8,000 of interest back to this number before it did all the rest of this stuff. All right, and then retained earnings should be that number at the end. All right, that's how they're getting that right there. But it's not balancing out, so something's off. Because these two should equal. And they're off by 88. Is I off by my accumulated? Let's see. 2562780. But that also has to have the 1320 added in. And then minus 2652100. It's off by $88,000. Which I will have to go look for. Okay, so but y'all can look around for that. Okay, so that is what I want y'all to do. And then when you're done with it, what you need to do is print it. Somewhere I can print it. Can I print it from here? I want you to print it and save it to a PDF. I did it the other day, but now I got to figure out how to do it again. I'll let print. Save it to a PDF. See, and you get, is it only printing one page? Okay, I found it. But anyway, so then I went to this check return and it will give you some different things here. All right, it's like critical diagnostics. A lot of times it wants like this missing information. So a lot of that's going to be that type of stuff. We didn't click all the little boxes that we were supposed to click. So you might want to go back and do that if you want to. It has some suggestions in here. And then to print it, go to File Return and do Print to PDF. And create PDF. And then save the PDF. All right. It'll give you the whole tax return. Save that PDF. And then that's what you're going to upload into the assignment. Okay. All right. If I find the mistake, I'll let you know what it is. Have fun.